Hi, hello students. Today we are going to discuss the lesson Dissolution of Partnership. Okay, what is my dissolution of partnership? Dissolution of partnership. Dissolution of partnership means we are going to wind up or shut down our complete business. Okay, so that is mean by dissolution of partnership. So, what will be the normal procedure for dissolution? Dissolution, it will be while wind upping the business. Definitely, we want to settle our complete liabilities. Okay, complete liabilities. For this procedure, we will sell our complete asset in second-hand market. Okay, by using that money and also the money which is present in our business, that is cash in hand 2500, here it is. By using that money and the money which we received from second-hand market, by using this complete amount, we will settle our complete liabilities. Okay, so in this lesson I am discussing two questions. First one is direct question and second one is with all the adjustment. Okay, so what are the ledgers we want to create in this lesson? The first one is realization account, and the second one is partners capital account, and third one is cash book. Only three ledgers we want to prepare in dissolution of partnership, and this is very easy lesson and direct also. All the adjustments are very direct and easily you can study. So listen carefully, and now we will do the first question. That is, one question is given: A, B, C are partners sharing profit and losses in the ratio of 2 is to 2 is to 1. Their balance sheet as on 31st March 2017 is as follows. On balance sheet also given, and you can see under that their adjustment. They decided to dissolve the firm. The following information is available: debtors and furniture were realized 10% less. Stock realized at rupees 3000. Plant and machinery realized at rupees 3000. Creditors were settled at 10% less. Realization expenses rupees 1000. Prepare realization account, partners capital account, and a cash book. So first thing we want to do realization account. Okay, first thing we want to do realization account. So there are three steps to do realization account. First step is whatever is given in balance sheet in asset side and liability, we will directly write into realization account without capital, cash, and accumulator profit and losses. Accumulator profit and losses means what? The profit and loss account, general reserve, workman compensation fund, these kind of things that we will adjust same like admission and retirement. That means we will directly post into partners capital account. Except these three things: accumulator profit and losses, uh, capital, and cash account. Except these three things, everything we will transfer into realization account. Okay, so except these three things, what is coming in asset side of balance sheet? Stock is there, furniture is there, plant and machinery is there. Profit and loss, it's a accumulated profit and loss, so we don't want to write. So whatever coming in asset side, we will write in debit side of realization account. Okay, so we will write stock is there, stock rupees 2500, stock rupees 2500, furniture 1000, furniture 1000, plant and machinery is there, plant and machinery, plant and machinery is 4500. Debtors is there, debtors it's 2500. Debtors is 2500, so this is the debtors. Okay, 2500. And provision you should write in this side. Okay, why? Because that is deducted from debtors, so you should write this side, credit side of realization account. So provision for doubtful debt, that how much? 500 rupees. 500 rupees you should write in this side. Okay, so now asset completely we transfer. Now liability we can transfer. Liability, what are the things there? General reserve we will transfer directly to partners capital account, because this is accumulator profit and losses. So rest of them creditors and loan is there. So 2000 and 5000 creditors and loan. So that we will transfer to credit side of realization. Okay, this is credit side. This is debit side. Okay, so uh, we'll transfer to credit side of realization. So creditors is there. Creditors how much? 2000. Loan is there. That is 5000. Okay, now completely we transfer. This is the first step. First step what? We'll transfer all the assets and liabilities except capital, accumulator profit and losses and cash book. Other all we will transfer. This is the first step. Then second step what we will do? We will realize all the things and we will settle the liabilities. Okay, we will realize our asset and we will settle our all the liabilities. That is the second step. So adjustment is given. Debtors and furniture were realized at 10% less. 10% less means what is the value of debtors and furniture? Furniture is 1000. Okay, debtors is 2500. So 10% less means 1000 into what is the 10 percentage of furniture, that is 100. So 10 percentage less means 1000 minus 100, that is 900. Okay, so realized amount we will write here. Realized amount, realized amount, that all we are receiving in cash, so we can bracket, we can write cash. Okay, so debt is, sorry, furniture and debtors is 10% less. So furniture will be 900 1000 minus 100, that means 1000 minus 10% of furniture, that is 100. So 1000 minus 100, 900. Debtors will get 2250. Debtors is 2500, so 10% of 2500 is 250, that we can deduct. So debtors we will get money from second hand market only 2250. So next adjustment is stock realized at rupees 3000. Stock realized at rupees 3000. So 3000 means what is the value of stock here in balance sheet? 2500. So we got 500 profit. So stock realized at rupees 3000. So 3000 you can write here. Stock 3000. And plant and machinery, next addition is plant and machinery also realized at rupees 3000. Okay, plant and machinery also realized at rupees 3000. Plant and machinery also realized at 3000. So total from the realization we got a cash of 9150. This will be directly going to the cash account. Okay, so while doing the cash account we will write, because together we are not doing, that will make you confused. So this much amount we got from second hand market through realization, 9150. Okay, so now we want to settle our liabilities, that is creditors and loan. Okay, creditors and loan. So anything is given in question. Okay, creditors were settled at 10% less. Creditors were settled as 10% less. That means what? Actual value of creditors is 2000. So that settled with 10% less. So that we are settling through cash. Okay, 10% less means, so 200 will be less. Okay, so we given only 1800 to creditors. And realization expense, next transaction is realization expense is 1000. So that also we will write in debit side of realization account. Realization expense, that also we settle through cash, right? So we will write cash. Okay, so 1000 is the realization expense. Okay, so one more thing is said, now for loan no adjustment is given. For loan no adjustment is given in question, but still we want to settle. Because why? Because we are going to shut down our business, we are going to dissolve our business. So definitely whatever liabilities are there, that we should settle, no other option. Okay, even if you are not realizing some asset in market, you don't want to write in credit side, but liabilities is settled by compulsory, that is settling of liabilities is compulsory. So we will write loan, how much we will pay by cash, how much, 5,000, we'll write 5,000 as loan, so that also settled. Now no other adjustment is there, we adjusted realization, and our other five adjustment we did in realization. Okay, now we can balance this account. Okay, so 5,000, 2,000, 5,000, 9,115, 18,300, 18, no, not 18,000, here debit side it will be 2,500, 1,000, 4,500, it will be 18,300, 18,300. While deducting that, we'll got a loss balance carried on for A, B and C. Total balance we got 1,615 after adding all the debit side, or after adding all the credit side minus debit side, we'll got a balance 1,615, and that should be distributed in the ratio of 2:1. Okay, so the answer will be 616 for A, 616 for B, 313 for C. So total 1,615. Okay, so 18,300 total. Okay, so that actually this is revaluation loss. Now we will directly go to the partners capital account. So how we can do partners capital account? Partners capital account, we will start with balance breakdown. That is given in old balance sheet. That is balance breakdown is 5,000, 2,000 and 1,000. 5,000, 2,000 and 1,000. For A it is 5,000, for B it is 2,000, for C it is 1,000. Okay, 1,000. Now we can transfer all the accumulated profit and losses. Here general reserve and profit and loss account is there. So general reserve will transfer to credit side of revaluation, partners capital account, because it is coming in liability side. Okay, so general reserve will transfer here. General reserves 2,500. So it is 2:1, right? So 1,000 will be for A, 1,000 will be for B, 500 will be for C. Okay, so that is general reserve. Next one is profit and loss account. Profit and loss account is coming in asset side, so we will transfer to debit side of revaluation, profit and loss account. Okay, if it is coming in liability side, we can transfer credit side. It is coming in asset side. I told you whatever things are coming in credit side of balance sheet, you can transfer to debit side. Whatever things are coming in debit side, that is liability side, you can transfer to credit side. So profit and loss is coming in asset side, that means credit side. So that is 5,000. So we'll transfer 2,000, 2,000, 1,000 according to 2:1 ratio. Okay, 2,000, 2,000, 1,000, 2,000, 2,000, 1,000. Okay, now next one is this realization loss. We will transfer realization loss. What is the realization loss? 616 for A, 616 for B, 313 for C. Okay, so realization loss. So what is coming here, that directly will transfer to here. So 616, if it is coming here this side, that means profit will transfer to this side. Okay, so realization loss 616 and 313 is the realization loss. Okay, realization loss. So we adjusted all the things. Now we can balance. Okay, balance carried on, that will be in cash. What balance we are getting, that much amount we want to give to partners. Whatever balance is there in business, after all the adjustment, that means after the realization and after all the accumulated profit and losses adjustment, what balance is getting, that should given to the partners through cash account. Okay, so balance will be 5,000 for A it is 6,000 minus 2,616, that is 3,314 balance for A, and 314 for B. For C it is 170. Okay, 170. So this much balance we should give to partners. Okay, now the last step, cash book we can do. So first you want to break down the balance of cash book. Any balances are there. So what is the balance of cash book? 2500 is the balance of cash book. 2500 is the balance of cash book. And whatever money we received some money from realization, right? This 9115 we received from second hand market. So that we will directly write into cash book first in debit side. That is realized amount, that is 9150 realized amount, 9150. And whatever money, this is our receipt. This side we will write all our receipts, and this side we will write all our payments. Okay, payments. Okay, so whatever money we received from second hand market, that we will write in debit side. And whatever payment we made, so what payment we made, so realization expense we made, right? Realization expense we made. Okay, so 1000 is the realization expense. Okay, 1000 is the realization expense. See, you can see here 1000 is the realization expense. So that we will write in credit side. And we settle creditors and loan, right? So creditors, for creditors we paid 1800. See, you can see from here in realization, you can see creditors were settled 1800, and also loan settled 5000. So loan also will write here in credit side of cash book, that is 5000. Loan also we settle. Okay, 5000. Okay, so anything else is to settle. So I told you whatever balance is coming in partners capital account, that also should give it to the partners. So 3314, 314 and 117 is the balance came for ABC. So that also we want to pay to the partners. Yes, capital will be, for yes capital it will be, for A's capital it will be 3314, 3314, 3314. For B's capital, for B's capital and C's capital, how much it is coming? 314 and 170 is coming. So 314 and 117 is coming. Okay, now all the payments we made. So we made realization expense payment, creditors, loan also we settled. The remaining cash from partners capital account, the balance carried on from cash partners capital account, that also we settled to partners. Okay, so now finally if you are calculating this, total will get 11,615. Here also 11,615. Automatically this debit and credit will automatically will become equal. What is the reason? What is the reason? Because after settling all the liabilities and after getting all the realized amount, automatically in cash book, after settling the partners money also, automatically this will be equal. Then if it is equal means the answer will be correct. So students, don't sit for making tally, that means equal. If the answer is not equal, that cash book is not equal also, please leave it. You will get maximum mark. Don't spend your time simply on that making it tally in any question, in admission, retirement, death, dissolution. Don't make the question tally. Whenever it is not getting tally, you are going to lose half mark maximum. Maybe a simple mistake, you are not going to get the correct tally answer. Okay, so don't sit in that, just leave it. So now we are going to do another question, same question only, same balance sheet, but the adjustment we are going to change a little bit. The balance sheet is same, capitals are same, everything is same, but adjustment we are going to make some difference. Okay, then easily you can understand. Okay, first one is direct question, this one is adjustment question with adjustment. Okay, so what are the adjustment? Half debtors were realized at 10% less, and the remaining is taken by A for 20% less than the book value. 20% less than the book value. Okay, it means what? It means what? 20% less than the book value. Okay, and the second adjustment is stock was taken by B and he agreed to settle creditors. Third one is plant and machinery realized at rupees 3000. Fourth one is loan was taken or settled by A. Fifth one is realization expense is 1000. So we need to do realization account, partners capital account and cash book. Okay, For this question we will do journal entry also. So first we will do with realization account. I told you what is the first step of realization. Same like what we did in first question. We will cross all the assets and liabilities except partners capital, cash book and accumulator profit and losses. So same like first video, same adjustment also. Stock it is 2500. Furniture, this all we are taking from balance sheet. Okay, furniture it is 1000. Furniture it is 1000. Debtors it is 2500. Plant and machinery, plant and machinery it is 4500. Provision we will write here. Provision I told you in last video. Provision for doubtful debt is 500. Will write here. I already explained in first question. Creditors, all creditors from liability side we will write this side 2000, and the loan it is 5000. Okay, so now first step is over. Now second step, what is settlement step? We will realize all our assets and we will settle all our liabilities. So for that we will go to adjustment. Okay, so what is the first adjustment? Half debtors were realized at 10% less. What is the debtors, total debtors here? 2500. What is the half? 1250. Okay, so half debtors were 1250 is the half debtors. That is realized at 10% less. That means what? 10% of 1050 means 10% less. 125 will be deducting from 1215. That means 10% of 1250 means 125. That will be deducting. So we will get debtors. We will write here realized amount. That is in cash. So debtors, how much we got? Debtors we got only 1125 after deducting 10% discount. Okay, 10% discount. And what is the, along with that what came? And the remaining is taken by A for 20% less than the book value. The remaining of taken by A for 20% less than the book value. Remaining means what? We already realized only 50% of the debtors. What will be remaining? Again 1250 will be remaining. 1250 will be remaining. So 20% of 1250 means what? 2250. That is 1000 for 1000 rupees. A was taken the remaining debt, 50% of the debt is for 1000 rupees. Okay, for 20% discount means for 1000 rupees. So what we have to do? Normally we are writing in realized amount, right? This. So instead of that, just you change the name if any partner is taking any asset. Okay, that means 50% of the debtors was taken by A means what? What you want to write? You want to just write yes capital account. Yes capital account. Yes capital account, and that will be crediting to yes capital account. Okay, you want to write yes capital account 1000 is taking the debtors for half of the debtors for 1000 rupees. That means 20% less. So before what we are writing? We are writing under realized amount we are writing debtors 1000. But here what happened? That debtors were taken by so we will write just his name. Instead of debtors we will write his name. Other all are said, everything is same. We are writing in credit side itself, only we are changing his name. Yes capital account 1000. Okay, yes capital account. So the first adjustment is over. Next one, second one, stock was taken by B and he agreed to settle the creditors. Stock was taken by B and he agreed to settle the creditors. So what we will write? Before in previous question we just wrote under realized amount, right? But now here stock was taken by B, so we'll write in his name. So B's capital. B is capital, and we will transfer this to his debit side of his capital account. Okay, so B is capital, stock in bracket. If you want, you can write stock. Here you can write debtors, half debtors. Okay, half debtors. B is capital, stock you can write. So how much he is taking? The value of stock is 2500. That is taken by B. The value of stock here 2500. That is taken by B, and he agreed to settle sundry creditors. What is the adjustment? And he agreed to settle sundry creditors. So if any settlement by any partner is there, so normally we are settling any liabilities to debit side, right? The side, for if any partner is going to settle also, we will write in debit side itself, and but we will write in his name. So who is agreed to settle the creditors? B agreed to settle. So we will write B's capital. Before, what we are writing? We are writing a sundry creditors in bracket cash, and we will write that amount. But here what is happening? B is ready to settle, so we will write in B's capital account. Okay, the side is same, we will write in same debit side, everything is same, but only we are changing his name because he is settling. Only we are replaced with his name. Okay, so instead of sundry creditors, we will write B's capital account 2000. So what is the amount? 2000. So amount will be 2000. Okay, he is ready to settle. Now information is given, so that means he is completely settling 2000. Okay, so second adjustment is clear. Now third adjustment, plant and machinery realized at rupees 3000. So no adjustment is given for plant and machinery, so only realized is given. So plant and machinery you can write plant and machinery, you can write in realized column, realized amount column, that is 3000. Okay, that is 3000. So we wrote plant and machinery realized 3000. Okay, no other adjustments are given, so directly we can write, okay, in realized amount column, that means second hand market column, realized amount column. Okay, now fourth one is loan was taken or settled by A. Loan was taken or settled by A. So before, what we wrote? We directly wrote loan account, that amount we wrote. But here what is given? Loan was taken and settled by A. So we'll write yes capital, yes capital loan. Bracket for understanding you can write loan. Here also I am writing something else. For in bracket you can write loan for your understanding. So what is the value of loan? 5000. That was settled by A. So we replaced loan with yes capital. Okay, so fourth adjustment is over. Now fifth one, realization expense 1000. That normally what we are writing in debit side. So realization expense 1000, that also will write here. Now all the adjustment is finished. 5 adjustment is over. Now all the adjustment is finished. Now we can balance our account. Okay, so here what is happening? Here what is happening? The side everything will be same for settlement and everything. But if any partner is settling from his own or her own risk, then we will write his name instead of that particular item. That is why we wrote, instead of loan, A is ready to settle means A is capital account. So instead of sundry creditors, before we are writing sundry creditors, but now we wrote instead of sundry creditors we replaced it with B is capital. So only that is the difference. Other all are same. Okay, so now we can balance it. I think debit side is more, so most probably it will be a loss. Okay, so balance carry down for A, B and C. We are getting, while calculating, we are getting 3375. Okay, it's a loss. So for A, according to 2:1 ratio, we are getting 1315 for A, 1315 for B, 315 for B, and 675 for C. Total 3375. Okay, 3375. Now we will do partners capital account. Partners capital account will be very easy. No need to be more tension. Okay, first we will start with balance breakdown, same like what we did before. So balance from capital balance sheet will take 5000, 2000, 1000, 5000, 2000 and 1000 is the balance breakdown. Okay, so after that we will write realization loss. I don't want to explain, you know that realization loss we got from realization account, this amount 1315, 1315, 1315, 1315, 675, 675. Okay, 675. After that we can write all our accumulator profit and losses. Here general reserve is the same balance sheet of previous question. General reserve is the, you know what we did. General reserve will get 1500. I already discussed it in previous question, so I don't want to show again. 1500. Now profit and loss account is the profit and loss account is coming in asset side, so we will write in debit side of partners capital profit and loss account. So that is 2000, 2000, 1000, 2000, 2000, 1000. Okay, now what we'll do, we adjusted everything which normally we are doing. Balance breakdown, realization amount we transferred, and accumulator profit and losses also we transferred. Now what we will do, now we will, I told you, if anything is settled or anything is taken by partner, we are writing in their capital account, right? So whatever came in their capital account, whatever came in their name, that also will transfer. What is the logic behind this? Because see, if a partner is taking half debtors, means what? That should be deducted from his capital account. That is the logic. You don't want to think about logic. Whatever coming in the credit side from his settlement, that you can write debit side of partner's capital account. So here debit side, what things are coming here for as capital, debtor is coming, right? 1000. So you can write credit side, debtor is coming, so you can write debit side of his what, his column. So you can write realization from realization only it is coming, right? So what is coming? Debtors. So for it is coming for a, right? So 1000 is coming for a, 1000 is coming for a, so 1000 rupees. So anything is coming in debit side. So B's capital stock is coming, how much? 2500. B's capital stock is coming, so that also will write realization, in bracket you can write stock, for in B's column 2500. Okay, now I think nothing else is there. Now we can check debit side of realization. So B's capital sundry creditors, B's capital it is coming. Okay, so 2000 is coming, so that is coming in realization, it is coming in debit side, so we can write in credit side. Okay, so realization bracket sundry creditors, this is for your understanding, bracket sundry creditors, 2000 is coming. Okay, for B 2000 is coming, for B 2000 is coming, and after that 2000 we finish. After that as capital loan of 5000 is coming, so realization bracket so this is for A, right? So we'll write in A's column 5000. So whatever in their name, in partner's name came in debit side, that will write all to credit side. Whatever came in the name of partners in credit side, that we all will write in debit side of partners capital account. Okay, so now that is finished. Okay, nothing else to transfer. Okay, so now we can balance our account. So we transferred all our accumulated profit and losses, balance breakdown, revaluation loss, and what came in realization in the name of partners. There everything we transfer. Now we can balance the account. Okay, balance carried on. For A, it is 6000, 11,000 minus 4,315. It will be, we are getting 6,615, 6,615 in debit side balance. But for B and C, we are getting balance in credit side, because debit side is small, so we are getting balance in credit side. That is for B, how much? 815, For B, how much? 815. For B it is 815, and for C it is 175. Okay, both you want to write in bracket cash, because both we are going to taken or settle through cash. Okay, so here what it means, why the B and C is coming in debit side, because after all the settlement, after all the adjustment, only A is going to get some amount from the company, that is 6,650. But B and C, they want to bring from home, because after settling all the liabilities and everything, the money is less in their capital account. So this much amount these two people want to bring, and 6,650 will be going to get A. Okay, only A is going to get some money from the company. B and C, they want to bring 850 and 170 from their home. Okay, it means what? We are going to dissolve our company, right? After all the settlement, we have a sort of 850 and 175. So this much amount these partners B and C, they want to bring from home. That's all, nothing else. So you don't want to worry about that. So now we'll write cash book, balance carried on. We'll start with balance. Now carried on breakdown. How much is the balance breakdown? 2,500 that we got from balance sheet. Okay, now realized amount we'll write. Realized amount. How much is the realized amount? The realized amount we got how much? Okay, debtors and plant and machinery total 4,125. We got the realized amount 4,125. Okay, so that we will write in cash book 4,125. We'll write in cash book 4,125. Okay, now we'll write in payment side realization expense. Realization expense 1,000. Okay, after that we will give the balance of partners. Here we are going to be only 6,615 to other all want to bring cash to the business. So we'll write here yes capital how much? Yes capital 6,650, and B and C, these two amount will be coming this way. Why? Because they want to bring the amount. Okay, that is why it is going to credit side, balance is going to credit side. So B is capital, how much they want to bring? 815 for B, and C 175. C is capital, it is 175. Now automatically these two side will become equal. 7,615, you can calculate 7,650. Okay, so now the cash book become tally. So this question is over. Only this much you want to do in this question. So adjustment means don't worry about that. That is same like normal question. But if any partners are taking over any liabilities or asset, we are just writing replacing with their name, nothing else. Okay, other all are same, other all sides everything will be same. Now we are going to do journal entry for this question. Okay, journal entry for this question. Okay, so normally we are going to do journal entry for capital account and journal entry for realization account. So this question we can do journal entry for capital and realization both. Okay, so we can just look at the capital account. So we can write journal entry what is there in credit side of capital account. General reserve is the realization, syndicates is the realization, loan is there. The three items are there, and in debit side profit and loss account is the realization, debtors is the realization, stock is there. Okay, this is the things we are going to do in journal entry. Okay, so journal entry same like anything I already told you. Whatever coming in credit side, that we will debit and we will write their account. Okay, so general reserve, how we can write journal entry? General reserve account that is credited. So how we can write journal entry? General reserve account debtor to A is capital, B is capital, C is capital, 1,000, 1,500. Okay, very easy. General reserve account, general reserve account debtor to S capital to B's capital to C's capital. Total general reserve is 2500. Total general reserve is 2500. To A 1000, to B also 1000, to C it is 500. So general reserve finish. You can write narration. Narration is compulsory, then only you are going to get maximum mark. What is the narration? General reserve transferred. Anything you can write narration. Okay, general reserve transferred, that is more than enough. Narration, that is more than enough. Now what is the second thing? It is the okay, realization sundry sundry creditors. Realization sundry creditors, it means what? Sundry creditors was settled by B. It is coming in B column. So what we will write? We will write realization account. Realization is credited, right? So we'll debit it. So realization account debtor to A's capital, it is coming in A. Realization account debtor to A's capital. Realization account debtor to A's capital. Realization account debtor to A's capital. How much is the amount? 2000. What is the narration? Realize sundry creditors settled by A. Anything you can write. What you feel that you can write, but narration should be there. Settled by A. Okay. What is the next one in partners capital account? Realization loan settled by A. Okay. Sundry creditors was settled by B, right? So you can cancel this to B. Okay, sorry. So sundry creditors settled by B, you can write. So loan was settled by A. Okay, so same like we will write realization because it is coming in credit side, so we will debit realization to yes capital. How much? 5000. Okay, loan was settled by A. Okay, this is the narration. Okay, this is the journal entry for loan. Okay, so now anything else is there in credit side? Okay, now already almost we settled everything. Now in debit side, profit and loss account is there, and other two stock and debtors relation also coming. So profit and loss account, how we will write profit and loss account? So we will write profit and loss account. It is coming in debit side, right? So we will credit profit and loss account. What we will debit? A's capital, B's capital, C's capital. We will A's capital, B's capital, C's capital. We will debit to profit and loss account, because profit and loss account is coming in debit side, so we will credit. So 2000, 1000. Okay, 2000, 1000. Okay, so 2000, 1000. Total it is 5000 in profit and loss account. So you can write narration as profit and loss transferred. Okay, you can write any narration, but narration should be there. Any question, narration should be there. So anything else is there in debit side? Yeah, realization debtors is the stock is there. That means debtor was taken by A and stock was taken by B. So what is the journal entry for this? Realization is coming in debit side, so we will credit it and we will debit A's capital. So A's capital account to realization account. A's capital account to A's capital account to realization. How much? 1000. Debtor was taken by A of 20% discount. So debtors was taken by A. This is the narration. Okay, now what is the next narration? Stock was taken by B, right? So this one, stock was taken by B. So how we can write journal entry? realization is coming in debit side of ledger, so we will credit it. So B is capital, accounted to realization. B is capital accounted to realization. Stock was taken by B, so B is capital accounted to realization. What is the amount? B is capital accounted to realization. The amount is 2500. What is the narration? Stock was taken by B. Stock was taken by B. This is the narration. You can do anything. Okay. So next thing, anything is the now we can do journal entry for realization account. Okay. So what is the first journal entry for this stock? For this we can write combined journal entry if you want. Okay. So this completely coming in debit side. Okay. Completely coming in debit side. So we will credit it and we will write realization. So the journal entry will be realization account debtor. The total of this. What is the total of this? 10,500 to stock, to furniture, to debtors, to plant and machinery. Okay, like that on journal entry you can write. Here also you can write journal entry, combined journal entry. No need to, if you want you can write separately, no issues, but better to write combined journal entry. Okay, so we'll write that. For realization we'll write that. So first one, for asset we'll write realization. All are coming in debit side, so we'll credit realization account 10,500. Total of the transfer to stock, to furniture, to debtors, to plant and machinery. Plant, if you want you can write separately also, no issue. Okay, 2,500, 2,500, 4,500. Write the narration. I am not writing the narration. All the asset were transferred to realization. You can write as narration. Okay. So next one is all the liability transfer. That what is the journal entry? Liability is coming in credit side of realization. So we will debit that. Okay. So provision for doubtful debt. Credit is loan to realization. What is the amount? Total of for credit provision for doubtful debt is 500, credit is 2000, loan is 5000, total 7500 to realization account. Write the narration also. Okay, now what is the thing? What anything else is in realization account? Now we have what we have now. We have this realized amount is there, and also this all realization expense also there. Okay, realized amount and realization expense also there. Other all things, B is capital, A is capital, we already wrote journal entry during the time of writing journal entry for capital. This already wrote journal entry. Okay, so no need to write again. So realized amount and realization expense we want to do journal entry. So realization expense, how we can write journal entry? It is coming in debit side. Okay, it is coming in debit side. Okay, in exam if they are asking to write journal entry, means you can write journal entry only for realization account, then everything will be including, even capital account also will be including. No need to write journal entry for capital account also, you can write only journal entry for realization account, so everything will be including. So what is the journal entry for realization expense? It is coming in debit side, so we will credit it. Okay, we'll credit it and we'll write cash. Okay, because we are settling realization through cash, so we'll write in cash. So cash account debtor to realization account debtor to, because it is coming in debit side, so we'll credit it. That means cash account debtor to realization. Okay, realization expense. This is coming as cash, right? So we'll write, we want to include the cash, so we will write cash in credit side. Actually, this is in cash. We settle through cash, right? So we will write cash in credit side. So we will write realization expense account debtor to cash. Okay, that is the journal entry. Realization expense account debtor to cash. Realization expense to cash 1000. Okay, that means realization amount paid, that you can write as narration. Okay, now we will go to what? We will go to what? Yes, this realized amount, debtors and plant and machinery, it is realized. So what we will write journal entry? What we will write journal entry? Both are in cash. Okay, that is why it is given in cash. Both are in cash. So cash we will write in credit side, and realization we will write cash. We will, sorry, both are in cash. So cash is coming in which side? Credit side, right? So we cash will write in debit side, and realization we will write in what were credit side. Okay, so cash account debtor to realization, that means debtors realization. Cash account debtor to realization for debtors, and for plant and machinery also cash account debtor to realization. Okay, so cash account debtor to realization. Cash account debtor to realization. How much? 1125 for what? For debtors. Debtors realized, you can write as LND, debtors realized. Next one is cash account debtor to realization for what? For plant and machinery. Plant and machinery. How much amount we received? We received 3000. Okay, 3000. Okay, this is the total journal entry we want to do. Okay, this is complete journal entry. Actually you want to do journal entry only for realization account if exam it is asking. So now we are going to do essay related 1 and 3 mark question. Essay related 1 and 3 mark question. 1 and 3 mark question related with that essay question. Okay, 4 or 5 questions only there that we can do. So A, B and C are partners sharing profit and losses in the ratio of 2:1 on the date they decided to dissolve the partnership. Their balance sheet shows a stock of rupees 2500 that will be taken by B, and B agreed to settle creditors for rupees 2000. Prepare journal entry. So we already did this. If you know the essay means, any kind of 1 word and 2 mark and 3 mark question will be very easy. So what is the question it is coming? In A, B, C are partners. They are sharing profit in the ratio of 2:1. They decided to dissolve the firm, and their balance sheet shows a stock of rupees 2500. It is there in question, you can see. Their balance sheet shows a stock of rupees 2500, and we wrote this journal entry also. Stock was taken by B, and he agreed to settle creditors. That is the question, but that question came in a short form. Okay, as a 3 mark or 2 mark question. Okay, and B taken stock in balance sheet is 2500, and that will be taken by B and agreed to settle creditors of rupees 2000. So what is the journal entry? We already wrote journal entry for these two. So actually what is the journal entry at the time of stock taken by B? B is capital. B is capital account debtor to realization. B is capital account debtor to realization, that is 2500 and 2500. Let me check whether it is correct or not. What is the first journal entry? The stock was taken by B. So we already wrote a journal entry here. The stock was taken by B. See this journal entry. This is the answer. Stock was taken by B. Okay, stock was taken by B. So we will write B is capital to realization. Okay, so journal entry for stock was taken by B. So if you know the essay question means the 2 mark 3 mark question will be very easy. See what happened here in uh, realization account when stock was taken by B. We are writing stock in his name. See, you can see here. We are writing stock in his name. I'm just changing. See, we are writing. Sorry, we are writing. Yes, sorry, not this one. We are writing stock in his name. See. So what is the journal entry here? B's capital is coming in which side? B's capital is coming in credit side, so we will debit it and we will write realization. So that is why we are writing, if stock is taken by B means B is capital account to realization account. Okay, B is capital account to realization account. And second, what is the second thing it is telling? And B agreed to settle creditors of rupees 2000. What is the journal entry for that? B is agreed to settle rupees 2000 means what? What journal entry we wrote before? Realization account debtor to B's capital. How much? 2000. Okay, 2000. This also we wrote in journal entry. Okay, we wrote in journal entry. See this one. Sandhi was settled by B. Okay, you should write narration. So the answer is over. Only answer is this two journal entry. Okay, what is the question? 2500 is the value of stock and that is taken by B, and instead of that he will settle the Sandhi. So we want to write only these two journal entry. Okay, so this is the way how the 3 mark, 2 mark question, 1 mark question will be coming. Then what is the second question? A and B are partners sharing profit and losses in the ratio of 2:1. On the date they decided to dissolve the partnership, their balance sheet shows a loan of 5000 and that loan was taken or settled by A. Very easy. Only one journal entry will be there. So what at the time of settling the loan, what we wrote? We wrote in debit side of realization in his name, right? So we'll write what we wrote in debit side of realization. We wrote yes capital 5000 in bracket. We wrote loan also, right? So what we can do? What is the journal entry? So realization account debtor to yes capital. How much? Yes capital 5000. Only this is the journal entry, nothing is there. Loan was taken by A. You can write a narration, loan was taken by A. But any journal entry if you are writing, it should be in a box. That means particular column should be there, ledger folio column should be there, and debit and credit column should be there. Now third question. A and B are partners sharing profit and losses in the ratio of 2:1. On the date they decided to dissolve the partnership. Their balance sheet shows plant and machinery of 4500. On that date, plant and machinery realized at rupees 3000. Prepare necessary journal entry. Very simple. Okay, what, so at the time of realization, what we are writing? We are writing in realization account. See, plant and machinery realized. See, plant and machinery realized 3000. We are directly writing under realization as cash, but this is should be in cash. Okay, that is why in bracket we wrote cash. So what is the journal entry? Cash account debtor to realization account 3000. Very simple. Cash account debtor to realization account 3000. So what we will write journal entry? Cash account debtor to realization account. Cash account debtor to realization account. How much? 3000. So the answer is all. Okay, now we are doing some theory model question, some 1 mark question. There is fourth one. At the time of dissolution, asset realized is showing that side of realization account. What side? Asset realized we are showing credit side. Okay, we are writing credit side, right? So at the fifth one, at the time of dissolution, realization expense is showing in which side? the time of dissolution, realization expense is showing in which side? That is debit side. We are showing debit side of realization account. Okay. So sixth one, at the time of dissolution, liability settled is showing in that side of realization account. Whatever liabilities we are settling through which side? Debit side, right? In debit side. Next one, at the time of dissolution, an asset was taken over by one of the partner is showing in that side of realization account, that is credit side. If it is asset was realized or taken over, any cases we will write in credit side also. And also one more thing is, if one liability was taken over by any partner, where we are writing? We are writing in debit side. Whenever we are settling also, if anyone is taken over also, we will write in debit side of realization account. Okay, if a liability is taken or settled. Okay, so thank you students. So watch this video carefully and do it your best, and please cooperate and watch this video, and please inform after watching. I will give some extra question, one more question from this lesson. Thank you. Have a nice day.